This material concerns a very important factor: emotions and the mindset characteristic of individuals who are capable of fully controlling them, thereby generating satisfying profits. In other words, it delves into what goes on in the minds of people who have experienced investment success. Crypto Explain: everything you need to know to stay safe. Emotions play an incredibly important role in the world of cryptocurrencies because when the market is green, everyone is making money and all valuations are rising, which leads to euphoria and satisfaction for all. However, during corrections, downturns, or when we enter projects that do not necessarily follow the expected direction, emotions come into play. And in most cases, we make many irrational decisions. Over time, the cumulative effect of such decisions can lead to our investment portfolio not looking as we would like it to. Therefore, in this recording, I will thoroughly discuss the topic of emotions and how to deal with them. Everything you will hear in this material stems from the experience I have gained over the years, as well as from the experiences of my investor friends, with whom I regularly exchange knowledge and insights. That is why this material is one of the most important, if not the most important, in the entire series. I hope you will extract as many valuable tips from it as possible. Initially, we will separate knowledge from experience. Just because you are learning about cryptocurrencies today does not mean that you will be an expert in the field tomorrow. To become one, you will first need to experience everything firsthand, make some mistakes, achieve some successes and failures, and only then, based on the combination of knowledge and experience, can you build something truly great. All of this is a time-consuming process fraught with many dilemmas and emotions, and it cannot be rushed through. Watching this material will make it much easier for you, but you can be sure that during your investment career, you will encounter many uncertainties and challenging moments. Remember that the most persevering, composed, and well-prepared individuals will survive. These three qualities determine everything. Keep in mind that the cryptocurrency market, as well as the traditional stock market, is divided into capital providers and capital recipients. For one person to earn, someone else must lose. Money does not come out of thin air. It can be said that it is a zero-sum game in which the exchange always wins, regardless of whether the market is rising or falling, because it always charges transaction fees from both the seller and the buyer. As for us, we start our careers in the group of capital providers, educating ourselves, developing and gaining experience, which over time allows us to transition to the second group, which constitutes about 1 or 2% of all market participants. Be aware that only a few succeed in this world. Everyone else loses. If you understand that this is always the case, the next step is to figure out what steps to take and what to learn to join the ranks of successful people. Unfortunately, it must be said here that life is cruel because hope alone is not enough to achieve anything, and we should not rely on luck or chance. Only proper preparation is crucial and provides a real chance to achieve what we want. Using wallets such as MetaMask, Kepler, decentralized exchange platforms, liquidity pools, bridges between networks, blockchain-based applications, minting NFTs, or any other activity related to crypto is something that can be learned, much like learning to drive a car. At the beginning, we learn where the brake pedal is and how to change gears, and over time, we do all of this without hesitation, fully safely and automatically. In the world of blockchain, it looks similar first. We hear about something and gather information, then we try to use it until it turns out to be easy, intuitive, and always the very important first step, which takes some time but cannot be skipped or ignored. The next stage of development is realizing that such knowledge is not enough to make money. Despite knowing absolutely everything, feeling confident, and thinking that you control the situation and have anticipated all possible scenarios, there will still be situations where you lose money and emotions arise, the control of which you also need to learn. Unfortunately, I have very bad news here because emotional control cannot be learned from this training or any other webinar. It is something you will have to deal with on your own and experience firsthand, and I can warn you right away that it won't be easy. I remember my beginnings when I invested my 2-year savings from really hard work abroad, bought my first cryptocurrencies completely unprepared and without a plan. So I am well aware of what people who are just starting out and decide to do something as foolish as I did might feel. As a result of my actions in the first year, I lost almost 90% of all my money, and for a long time, negative emotions, bad decisions, and systematic mistakes kept appearing. It was only after a year, on the brink of cryptocurrency bankruptcy, that I decided I wouldn't be a loser and would reach for what I wanted, no matter how much work I had to put into it. It was the day when the process of working on emotions, acquiring knowledge, building strategies, and diversifying began, which allowed me to recover the initial losses within a year and also made me close each subsequent year with a profit, being fully satisfied. All of this required deep reflection on what I was doing, how I was doing it, and why I wasn't achieving the planned results, including ideas for changing certain behaviors and sticking to the plan I had set for myself, while simultaneously monitoring whether it all worked and made sense. One of the key stages was diagnosing which behaviors were causing me to lose instead of earning. I mentioned that you can't learn this from any training because I am more than willing to give you some valuable tips, but ultimately you will have to do all the work on yourself independently. It's just like going to the gym and achieving your desired result. You may know how to do it and plan everything properly, write down your diet and exercises, but whether the result appears depends solely on you, your consistency, and your consistent pursuit of your goal, because no one else will do it for you. Additionally, each of us is different and may cope better or worse with specific aspects of investing, so you are the only person who can assess which aspects are problematic and which need to be worked on to achieve the planned results. Acquiring such a skill and effectively implementing it into your life is something that will make you a free person. Continuing with issues related to psychology and emotional control, in our society, from a young age, we are taught to respect money. In my environment and among my friends, it has been repeated since childhood that large amounts of money entail great responsibility, which is associated with serious occupation and wise decisions. Subconsciously, from a young age, we are taught to fear large sums, and practically no one can show us how to acquire such large amounts, and more importantly, how to manage them wisely. As a result, as the amount of funds in our cryptocurrency wallet increases, the number of emotions accompanying any decision-making also increases, pressure builds, and consequently, our effectiveness decreases, especially at the beginning when we experience something like this for the first time. There is a little trick that helps deceive our perception, namely, at the beginning, I preferred to convert all transactions into Bitcoin or Ethereum instead of dollars. Seeing small numbers after the decimal point instead of amounts in the tens of thousands makes it much easier to make rational decisions without imagining how much money is hidden under this inconspicuous little digit. Nowadays, after many years, regardless of the amount I transact, it doesn't impress me at all, even if the price starts to drop right after the purchase, because sometimes it happens. If you give yourself enough time, in the future, you too will approach every sum completely neutrally, without any emotions, which ultimately will give you full control over what you do, determined by your logic, experience, and knowledge, not fear of loss. Until this happens, you can trick your subconscious mind a little. Notice that the amounts on the screen are exactly the same value. If you conduct transactions using these values, I guarantee that the price fluctuations converted to Bitcoin will not have as much of a psychological impact on your behavior as those converted to dollars, which ultimately translates into better capital management and a sense of peace. This topic largely overlaps with the phenomenon of FOMO, the fear of missing out. Sometimes the search for a good investment opportunity seems endless. We can endure a day of searching, 2 days, sometimes a week. However, over time, when we see everyone else making money while we wait, Tension arises from the awareness that our inaction causes us to miss out on all opportunities. As a result, we often enter into unwise positions that deviate from our planned strategy, ultimately leading to no profits or even losses. Remember that not taking a position is also a position. If you are waiting for an opportunity, no matter how long it takes, it will eventually appear. Even if you miss out on other opportunities and everyone else is making money, it should not matter to you at all. Opportunities are like trains. They come and go cyclically, always. If you miss one, it doesn't matter. Another one will come, and then another and another. In this case, patience and sticking to established principles are crucial. Additionally, you will never find all the best projects in which you can participate and profit from their growth. There will always be a cryptocurrency that grows faster, grows more, and that's completely normal. We cannot control the entire market, and that is absolutely normal. If you decide to enter the cryptocurrency market just because its price is rising rapidly, you may find yourself buying it from people who entered when it was quiet, when no one was talking about the project, who accumulated large amounts at very low prices by exchanging this information in closed groups and are now realizing profits by selling their holdings at a potential peak. Even if there is a lot of hype now, everyone is talking about a project that is growing, tweeting in superlatives, causing the price to skyrocket. There is no guarantee that it will be the same tomorrow. Consider this when analyzing the risk associated with entering such a position, because very often you can gain a lot, but you can also lose a lot. It is very often the case that specific ideas and specific cryptocurrencies are promoted online, which can greatly benefit those who engage in their promotion, while you can be sure that the people promoting and writing about these topics, gaining wide reach, do not care whether you will profit from it or whether you will just be a source of capital. In other words, they do it for their own benefit, not for yours. And here also works the principle I mentioned earlier: 98% of people lose because they do exactly what everyone else does. Everyone buys, so they do too. 2% earn because such individuals do everything right, not like everyone else. The truth is that money matters most, so if you are considering making an investment move, think about why you want to do it now. Is it because you want to make a profit, or is it because you want to own that particular cryptocurrency, just like everyone else? If the reason is the latter option I mentioned, you will most likely incur a loss. If you feel overwhelmed by the awareness that someone else has made a profit and you haven't, ask yourself a few important questions, such as what caused that person to enter the project earlier while you did not? What did that person know before you? Where did they look for that information? Why were they ahead of you? What caused that person to know about the opportunity earlier while you only found out when the price started to rise? Answering all these questions will allow you to prepare much better for the next opportunity, thereby significantly increasing your chances. The biggest problem is that we must predict what the chart will look like on the right side, because when it comes to backward analysis, everyone can say something like, "I would buy here and sell here." So backward analysis is always effective. Everyone can calculate how much profit they would make by catching the perfect bottom and the perfect peak. But unfortunately, trading on the exchange doesn't work that way. When it comes to predicting the price in the future, for example, when it comes to Bitcoin, many aspects should be taken into account, such as the emergence of ETFs, the halving approaching, the current demand for Bitcoin being 10 times greater than its mining, and everything indicates that Bitcoin should rise. But will it really? We can never be sure, because something could always happen to change the sentiment. For example, news might appear on TV that cryptocurrencies will be banned in the United States, and that can destroy our entire plan and all analyses within one day. So, we must consider each of the possible scenarios by analyzing which of them has a real chance of occurring. Making decisions, a conscious investor remembers about potential mistakes that may arise and tries to avoid them. For example, one of such mistakes would be a lack of sufficient knowledge about the cryptocurrency market, how this market works, and what technology it is at all. And this is something we have already discussed earlier. Without basic knowledge, we cannot move forward because sooner or later there will be gaps in preparation. The second thing is not realizing profits, meaning that if today we have some profit in our account, for example, 10% or 20%, as long as this position is open, this profit is just a virtual number visible on our screen, for which you cannot buy anything. Yesterday you could be 5% ahead. Today, it may be 15% on the plus side, but without realizing the profit and without securing the position, tomorrow you may wake up with an account balance 10% in the red. The cryptocurrency market is very volatile, and skillful profit-taking through stop-loss orders or withdrawing the investment after reaching a specific price threshold that we observe are elements that allow us to stay in the game. You can find information online about dozens of virtual millionaires. These are individuals who had a lot of money in cryptocurrencies but did not close their positions in time, did not exit the market, and ultimately ended up with a very similar amount of money to what they had at the very beginning, or with a small profit. For example, having $2 million, they woke up and found that the value of their portfolio had decreased, now worth only $1.5 million. The bitterness that something slipped away from them made them wait longer and longer for prices to return to previous values. But ultimately, it never happened. The bull market ended, or the projects they invested in declined, thus naturally depriving them of their entire profit. Be smarter and forget about greed by learning to take profits. To make it easier for yourself, you can imagine what you will actually be able to buy in the real world if you close the trade now and sell the cryptocurrency you previously invested in. Another thing is investing more than you can afford to lose, meaning that if you plan to buy a car or a house, or you want to renovate the kitchen, have a wedding, or have plans to do something else equally important with the money, deciding to use that money to buy cryptocurrencies in the hope that in a month or two you will earn all that back and still have half a Bitcoin left, then indeed maybe that will happen. And that's what I wish for you. Just think about what if your plan doesn't materialize and you start losing instead of earning? Will you wait for the prices to return to the point where you made the purchase? Can you withstand such pressure? What if the prices don't return to that level? What if 30% of your savings disappear? Even if you can answer these questions, I guarantee that sticking to the decisions you make will be very difficult, especially since waiting for price changes usually drags on indefinitely, and every hour, every day will raise doubts in you. Therefore, you should not invest more than you can afford to lose because the market is unpredictable and you will never have a guarantee that you will be able to realize your plans. And this is one of the most basic issues. If you invest money that you have earmarked for another purpose and the day comes when you have to withdraw it, you may have no choice but to close your positions at a significant loss just to recover at least some of your funds. Try to avoid this at all costs. Another thing is a lack of understanding of risk, and here I mainly mean a ratio called the risk-reward ratio. For example, if today, at the current price of Bitcoin, you had the opportunity to invest $20,000 to earn $1,000 most likely, each of us would say no because the risk is too high and the profit is relatively small. Very often, people do just that. They invest large sums, hoping for a small profit with relatively high risk, and then they struggle with themselves on the principle of, what now? What should I do? Because it didn't work out. Similarly, if you had the chance to earn $40,000 by investing $20,000 during a 2-year bear market, for example, at a time when nothing is happening in the market, there are no increases. There were many declines that slowly stabilize. And all this happens when no one is particularly interested in cryptocurrencies. Then here, the risk of loss is much lower because since the prices have been falling for 2 years, they can of course still fall by another 5 or 10%, but there is much less chance that they will fall by another 40 or 60%, as often happens after the end of a bull market. So, we have to assess the ratio of potential loss to potential profit. which becomes very simple with experience. Another aspect is the lack of setting profit and loss limits, especially directed towards those trading with leverage, because without them sooner or later, and it often happens relatively quickly, the account is simply wiped out of funds. Once again, I'll repeat that securing our capital is fundamental. If we don't do this, it will simply disappear, and without it, we'll be powerless. Therefore, it's much easier and wiser to secure money rather than trying to recover it later. If we decide that we always close a position when the loss reaches -5%, then we should stick to that, and the same goes for profits. Making money on the stock market begins with learning how not to lose and then how to add to what we have, which means that from week to week, from month to month, we have increasingly better opportunities and achieve better results. If you configure everything properly, for example, using stop-loss orders, you won't have to refresh charts every 15 minutes and check what's happening because both the stop-loss and take-profit orders will be executed automatically at the right time. You simply need to learn and practice all of this until it becomes a habit, making the market later on enjoyable and relatively stress-free. Another thing is investing in only one cryptocurrency unless we're talking about Bitcoin, as it's a reasonable option for those who don't want to deal with altcoins. This is a topic I covered in a material on diversification, so we won't focus on it here. I strongly encourage you to watch this separate material, combining cryptocurrencies with gambling, acting without a plan, without considering what we're doing, and without preparation, just like playing a slot machine in a casino thinking, maybe I'll be lucky and it will just work out, is the easiest way to deplete someone else's wallet at the expense of our own funds. I really don't recommend it. It's a waste of your time and money because it doesn't lead to anything worthwhile. There's no point counting on luck. It's not a factor that guarantees success. Moving on, relying on unverified sources of information, such as when someone claims that a particular cryptocurrency has partnered with Apple or a project has been integrated with Microsoft, doesn't necessarily mean it's true. We should check all information in at least several sources to avoid misunderstandings and fake news, which are as abundant as real information. Making investments based on false information is like building a house on clay foundations that could dissolve at any moment, leaving us with nothing. Another aspect is ignoring market events, by which I mean things like halving, international regulations, resolutions of significant issues regarding the operation of major exchanges, important project updates, and everything else happening within classical economics, but also affecting the cryptocurrency market. These are elements that have a significant impact on prices, especially when some events are cancelled or postponed, as these are situations people await before making decisions regarding buying or selling. If we see an important date approaching for a project in which we're investing, we should be aware that there are several different scenarios, both positive and negative, that we need to consider to protect our capital from each possible option. It's not necessarily about always reacting. Rather, it's about not being surprised by an event that half of the cryptocurrency community is talking about and you know nothing about, leaving you astonished. Another aspect is acquiring the appropriate legal and tax knowledge because taxes are something we can't escape. If you're counting on making $1 million and disappearing, unfortunately, it might not work out. With any substantial amount, tax is something to consider in calculating the entire profit because it's usually a significant cost. Even if cryptocurrency taxes aren't currently verified in your country, you can be sure that will change in the coming years. Today, there already exists and operates software capable of tracking practically all possible transactions and transfers associated with specific users. Therefore, when tax authorities begin to utilize such software, they will easily be able to calculate the taxes owed by their citizens, and they will certainly do so. The question is when this will happen. Perhaps we'll wait another 2 years. It's possible it will take 4. We don't know yet, but it will definitely happen. If you think cryptocurrencies are anonymous, you're mistaken. They're not. And you can find more about this in the material on my YouTube channel. Another thing is focusing on short-term gains. If you check the chart every half an hour, stressing over price fluctuations, you're making the mistake I'm talking about. Notice that for most cryptocurrencies, you can assess the appropriate price range for entry and exit by considering a broader time perspective, and that's what I do personally. I mainly pay attention to daily and weekly time intervals, and based on them, I evaluate whether the entry and exit prices are appropriate, whether they're not too high, and after increases, I look for a reasonable threshold to exit, locking in profits. Checking the chart every 15 minutes if you're not a scalping practitioner doesn't give you anything and often just adds unnecessary confusion to our plan. Another element, successful people don't focus solely on the cryptocurrency market, but go far beyond it. If you treat blockchain as the only option to become a millionaire, consider what you'll do if tomorrow it turns out that Satoshi Nakamoto remembered about the 1,000,000 bitcoins he holds in his wallet and decided to sell them all. If such a situation were to occur, it would surely cause a panic unlike any we've ever experienced. Therefore, if we want to have a stable and secure future, we can't focus solely on cryptocurrencies. In addition to crypto, it's worth relying on other forms of investment like silver, gold, real estate, or even wine or comics. If your finances are diversified, even if cryptocurrencies disappear overnight, you'll survive and manage despite the loss of one of the important financial pillars. Expanding beyond cryptocurrencies and finance allows us to gain peace of mind and self-assurance because it makes us more resilient to random situations that sometimes occur. And that's how financial sharks think. The next element is getting angry at the market. For the exchange, it doesn't matter how old you are, what gender you are, what experience you have, or how effective you are. If something doesn't go your way, it's not the exchange's fault. So getting angry at it has absolutely no benefits. In any situation where we're upset and disappointed, we should look for the cause within ourselves, wondering where it stems from, where such feelings come from, and what to do to get rid of them next time. Remember that sometimes you win, and sometimes the market wins. So as someone aiming for success, you simply have to treat it coolly as a constant element of the game without emotions and moods because it will never result in earning more. Now, what mindset does a wise investor have? First and foremost, they educate themselves constantly and are aware that they don't know everything. However, they know that the market is constantly evolving, new solutions emerge, and knowledge needs to be continually updated. They invest only as much as they can afford to lose, avoiding the pressure associated with spending too much money. An effective investor diversifies their investments, ensuring comfort and peace of mind in building their financial future based on many possibly independent pillars. Financial success requires readiness for declines, meaning they never invest all they have. This allows them to use those funds, for example, to average the cost when the market takes a dive or for opportunities that cyclically arise. By being prepared for declines, meaning having some reserve of stablecoins at all times, they never miss any opportunities such as new projects, IDOs, ICOs, and similar, from which they can benefit at any time, enabling them to fully utilize the market as much as possible. If you invest the entire amount allocated for cryptocurrencies, every price drop will cause dissatisfaction. But adhering to this principle will turn every decline into satisfaction because you'll be able to buy more at a better price. And that's the fundamental difference. A wise investor enters safely, meaning they research the project, enter in batches, check the potential of the cryptocurrency, whether any significant events will occur in the near future that could affect it, and know everything essential about it. A wise investor knows how to take profits without waiting for the price to skyrocket to the moon. They can be satisfied with any profit. Notice that investing in real estate yields no more than a few percent return annually. So if you make a few percent on a cryptocurrency in a week or even a month, it's a significant difference, which we often fail to appreciate. A wise investor only buys projects with fundamentals, ones that have a chance to survive a bear market because you never know when it will surprise you. If we invest in typical shitcoins or degens, there's a risk they'll simply disappear with the end of the bull market and the hype around them will never return, as you can verify by checking how many altcoins have simply ceased to exist. They don't seek the holy grail of investment that will yield 100 or 200 times profit, because firstly, among thousands of different cryptocurrencies, it's very difficult to find such a thing, and secondly, systematic profit-taking and compounding interest yield much better results than counting on a golden shot that most often never appears. A wise investor doesn't experiment and sticks to their plan. When will you be among the 2% of successful people? You'll be there when your own experience, combined with time, overlays all these elements I've told you about today. Each of us has individual predispositions, and it all comes down to utilizing them properly, fighting against all the flaws that hinder investing. The key to success is not giving up. I wish you to make as many profitable decisions as possible and to develop your knowledge and skills that will allow you to build your financial independence. I also hope that you will survive the learning period and coping with emotions, which in my opinion is one of the most challenging stages. Good luck!